Let's take a step back if we can and focus on the broader commodity complex. The inflation picture has been murky here in the U.S., but China has been grappling with a pretty clear deflation story, with July consumer and producer prices both falling for the first time since November of 2020 during the peak of the global pandemic. We all remember that well. Dave, weigh in here. I mean, how should we think about China's rocky reopening and then the ripple effect on commodity prices?
Yeah, I think, again, from a long-term perspective, I think commodities as a core allocation make a ton of sense. You want to do that in a tax-efficient wrapper with minimal expenses. The short-term issue about China, I think, is very real. And I think we underestimate how significant the wall that is facing China, whether it's demographically, whether it's in the finance system, they have significant internal issues. And that's going to continue to hit core commodities, things like copper. Less so energy commodities. I think they could end up being a surprise consumer there in some parts of the commodity spectrum. But those industrials, those construction-based commodities, I think that the happy days are over there, and we're going to face a continued challenging environment if we're expecting demand to come from China. Meanwhile, I'd point out, however, we have a manufacturing revolution happening in the United States, and a lot of those commodities are going to go in the ground here.
Well, obviously, a lot of cross currents at play in the commodities complex. We've seen crude oil prices rising along with wheat. I mean, is a rise in commodity prices a threat to the lower inflation story?
It absolutely is. And, it could be the surprise story for the last last few months here of the year. We've been battling with this narrative, of course, that inflation has been defeated and inflation is coming down. All the core metrics seem to be moving in favor of that, including, of course, most importantly, commodity prices. Gas prices are down significantly from the highs, and all across the board, the lumbers and all these stories that we know very well over the last couple of years have gone away. However, as people might have noticed over the last couple of years, over the last couple of months, prices started to slowly tick back up again, and that started with oil, and that's moving now to gasoline and other commodity prices. A large amount of that is to do with specifically in the energy market and specifically OPEC's willingness to seemingly step in and defend oil prices where they are. But I think, to Dave's point, a big X factor here is China. We know that the Chinese economy is suffering. That's not the news here. The news really for the commodity market will be how aggressively is the Chinese government going to step in and defend the underlying market and stimulate their economy. And I think if that happens, we could see some more demand, particularly for the core commodities that have been most affected, like copper. And so we could have a surprise here between now and the end of the year where we see commodity prices rising and really go against or counteract the inflation is falling narrative.
Dave, what are the broader flows telling us about shifting investor attitudes about the commodity complex?
Yeah, so in general, we are still sitting on a lot of cash, right? So a lot of folks have banked up into short duration bonds, sitting in cash. As that money has come back in, where we've seen it come in is just straight into equities. It has not been flowing into commodities in any kind of a flood. And I'm also a little bit of a seller on this idea that some uptick in those supply prices is just going to immediately slam inflation. A lot of the inflation prints we've seen over the last 18 months have been about price and margin, not about input costs. There's a lot of room in those margins for companies to hold pricing and absorb a little bit of fluctuation in the input costs. So I don't think that that's what's going to drive things. I think we'll see folks reallocate back into commodities as they wade back into this market, which is still very much an in-process movement.